Today is Monday, March 12th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADMIS Senior Financial Economist, and Mike Niemiec, ADM Investor Services Grain Analyst. Mike, let's start with the grain markets this morning. Would you please comment on the recent USDA monthly report?
Okay, we had a report last week, and I kind of thought that on that report that starting in January we had a somewhat bearish supply and demand tables that came on out, and we had a trade that was a sizable net short position in corn, wheat, and soybeans. And since that report in January to this current report, we found out that we even have more supplies of wheat and soybeans and still adequate supplies of corn. But the one big thing that did happen was that we went from a sizable net short position in corn, wheat, and soybeans into sizable net long positions in the corn, beans, and soybean meal. Also, we found out that the USDA has been finding more demand for corn and less demand for beans, and it seems like the trade has been on this buy the beans, sell the corn type of mentality. So I think that has been the biggest change. And I think that what we saw on this past report, that we've seen a little bit of a retrenchment of liquidation of net long positions in the in the corn, beans, and meal from the last commitment trades report that we saw.
Planning here in the U.S. just around the corner. Where do we go from here?
So where do we go from here? All right, well, as I mentioned, we just had the USDA report from January to March. We have the trade that's net long the beans and the corn and in the meal. I think that with two respects in here. At the end of the month, we're going to have a prospective plannings report and a quarterly stocks report. That's going to be in 2 weeks. We're also finding out that we have more supplies around. We're also going to have some type of cognizant, how do you want to say it, support because of the Argentinian situation as far as having a smaller crop. We're going to see how that pans out with our exports. Can't really say that it's going to be all that sound. Find out that over the weekend the Chinese are looking out to export meal. We also found out that the South Koreans were buying more South American meal, so all this perceived demand that the U.S. was going to get was going to be coming from the U.S. We'll see how that pans out. So I'd have to say in hindsight in here that we were on a rally from January on up to our March highs that logically I would think we'd have somewhat of a technical halfway pullback in that whole move and go from there.
South America you mentioned a couple of times in your comments. Any news out of South America weather-wise, or is that behind them now?
I wouldn't say it's behind them. I think it's probably behind them as far as maybe trying to define a supply. I think it's not behind them as far as finding how much demand we can get from it. There is a little bit potential pattern change coming in Argentina as far as this coming weekend. Will it be a pattern change or will it be a soaker? And right now, as far as Brazil goes, if you look at one of the groups that came out over the weekend, as far as the bean harvest goes and the corn plantings and or the harvest, they got 2 crops down there. Everything's kind of around average right now. So I don't think there's any big of a worry wart going forward at this time.
Finally, Mike, in regard to actual trading strategies, what approach do you plan to employ at present and into the near future?
I am going to go look at the halfway back point. As I mentioned, at this January lows to the March highs with respect to the Argentinian crop being lessened, with the potential as far as liquidation coming in the marketplace from the commitment trades report, with us looking at the prospective plannings quarterly stocks report coming on up at the halfway point. I think I would like to go and take a little bit of a long position and go and see what the U.S. summer season is going to look like.
Great. Alan, on Friday, the Chicago Federal Reserve Bank President Charles Evans suggested that the Fed could wait until after the March 21st Federal Open Market Committee meeting to hike interest rates. What are the market implications of these comments?
Well, first of all, it seems extremely likely that the Fed will raise rates by 25 basis points at the March 21st meeting, so I don't think there is going to be any type of delay. It still looks like there's only going to be 3 rate hikes this year. Some at the Fed are still saying 4, some now back down to 3. In any event, I believe the Fed is going to be relatively slow to hike interest rates this year and into the future, but the Fed is still on an aggressive path and there will be higher interest rates coming.
Also on Friday last week, it was reported that non-farm payrolls in February jumped by the largest amount since July 2016 to 313,000. Why did the U.S. dollar trade lower in spite of this bullish news?
Well, the dollar initially rallied on that news with the non-farm payroll headline report. But then as traders looked at the wage numbers, those were a bit disappointing. So the dollar went from higher then to lower on the day as traders took a second look at that report. Now the dollar is a little bit higher today, but I'm thinking that even though it's a bit stronger, I think that there's a very good chance that we will see the dollar closing lower. And also I think that the dollar index will probably tend to trend lower as well, longer term.
Though there's still a higher level of volatility in the stock indexes, the NASDAQ futures advanced to new historical highs on Friday and again this morning. Why is this, and do you feel like the S&P 500 futures and Dow Jones are soon to follow?
I do believe that. Basically, the feeling is that the NASDAQ is the leader in both directions, and if the NASDAQ can make new highs, that could be a very good indication that the other indices are not far behind. So it's I'd have to say a very good indicator and a very strong suggestion or trend indication that the other indices are going to work higher.
Finally, Alan, there's still a lot of noise in the news centering on political issues and our current administration, such as the confidentiality agreement that's being contested and the news of a potentially groundbreaking meeting with North Korea. Can these issues have an impact on the stock market and the U.S. economy?
Well, absolutely. There has been a variety of negative news items, such as the trade situation, and some positive items, such as what's going on with North Korea. But the market seems to be focusing on the bullish items. In fact, that's potentially why the NASDAQ is at these new historical highs. So the fact that the indices can move higher on mixed news, and even when we do get negative reports, the follow-through is just not there. So that has to be viewed as a sign of strength for all of the indices to perform as well as they have with this mixed news.
Yeah, when a market ignores what would be negative news and continues to move in the trend, that's
Exactly.
even further bullish.
Exactly. When a market is higher on bearish news, that in itself is viewed as a sign of strength.
All right, remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.